What's going on is food's crowding out spending in the other part of the consumer's wallet. So food inflation right now is still running in the low double digits. That's causing the consumer to stop buying goods. There's also the COVID hangover effect. We were in our homes for 2 years, buying everything, every good. We didn't spend on travel and leisure. Dollars are shifting to leisure spending, and dollars are being prioritized in the good side on the food side. So Walmart just has a higher mix of food. Target has a higher mix of goods. And at the same time, the consumer's trading down. So that mid to high income consumer is trading down into Walmart because they're trying to find the cheapest food out there.
So you think Walmart, if they do beat, will raise their guidance for the full year or no?
I don't. I think it's going to be interesting because our view is that the consumer is really slowing down right now. I think you're going to hear Walmart talk about
Is slowing down?
Is slowing down. And you're seeing it across all parts of the wallet, not just food, but even leisure spending. I cover Ulta. You're seeing cosmetics trends slow as we get further into the reopen. So, for Walmart, I think you're going to hear him talk about the consumer, particularly the low end, using more credit to fund purchases, funding everyday needs. And I think that's going to cause them to want to be very cautious in terms of their outlook.
We had the head of the Bank of America Institute in last week, and one thing they've seen is a drop in consumer spending, too. It's the first time that's happened in a few years on the monthly numbers for April. But the way they looked at it, it was high-end earners that were really feeling the pinch the most. That They had seen a drop in things like bonuses that were being paid, and also had seen more help coming in terms of unemployment, that they had a 40% increase, that upper echelon, 40% increase in unemployment, because that's where the layoffs are happening too. Does that match your thesis with what you're seeing? Because it almost sounds like you think the lower end of the spectrum is getting squeezed a little more.
I think it's happening to both. I think the mid to high end, you started to see the trade down at Walmart late last year, trying to find the cheapest food option. Now I think the low end is starting to show some strange wage growth is still very high for the low end. But if you look at, like, for example, the Chase credit card data that we examine, you're seeing spending in every category. So even like restaurant spending relative to 19, makeup spending relative to 19. And I think the low end, while wage growth is still very high, it's actually moderating down. And part of the strength is simply the fact that the low end spends more of their wallet on food. And so that's a need-based item. So that's going to be a little bit firmer, where that mid to high end is pulling back on the discretionary side.
Having said all of that, you think Walmart's going to be the beneficiary, but right now you have a neutral rating on Walmart and an overweight rating on Target. Why?
Yep.
Is it just pricing?
Yeah. Our thesis is basically on Walmart is that if you look out 6 to 9 months, that food inflation is going to go from low double digit, call it 10, 12%. By the fourth quarter, we project it to be about 2%. So Walmart goes from comping 6, 7% to 1 to 2%. So it's fine now. I understand why people like it right now. I think if we look out 6 to 9 months, it's a different situation. In Target, our view is that the negative earnings revision cycle is going to start to hit a bottom. It's absolutely being pushed out right now, so we have to look a little bit forward, but we think we're closer to the bottom on margins. And then once you get to a point where you can have the Fed easing, Target's a stock you want to own because it's more cyclical.
You are concerned that Home Depot might also miss estimates as well. Why is that?
Yeah, I think there's two things that's happening there. One, you still have the COVID hangover. We were all stuck in our backyards buying fire pits and solo stoves and whatnot a few years ago. The lagged effect of the Fed on housing is causing pricing to moderate. Turnover is still negative. And then the last piece is, I think, what's going to be very different about this Home Depot report is that they're going to talk about the remodel spend starting to slow down. And I think that is what you talked about, Becky, with the mid to high end consumer starting to dial back that discretionary spend.
Can I get a sale on a fire pit now?
You can get a good sale on a fire pit.
Now it's finally happening?
Yes. A nice new solo stove.
Okay.
Hey, Chris, thanks for coming in.
Thank you very much.